It's high resistance to the buy side. Remember, it's counter trend. This is counter trend. So do you guys see what I mean about how SMT saves me from the fake distribution here? SMT at the highs is significantly missing. So a fake distribution lower is what I'm trying to avoid by getting involved in a false expansion, right? The move lower, in my opinion, without the SMT at the highs is a false expansion. Now, again, even if we had lost this trade, or even if we lose this trade, the thesis here for price delivery doesn't change, right? It's still a good trade with a higher time frame context. We have to separate the outcome from this trade. That's the most important thing, right? Because we don't know what's going to happen here. We have SMT forming above these hourly highs right here, right? So we have to see if price is respected here. I've moved my stop loss to below this order block. So now I'm only risking 5 points. Again, every swing high that's deviated in a bearish market can be considered to be a potential reversal. Every swing high that's deviated with SMT. I'm going to understand that we're in bearish order flow and accept that, but I'm not going to put my stop loss to break even, because a break even stop here is not structure permitted. This here is covering the low of the order block. It's a more permissible stop loss. Okay. How many how many bricks were you shitting when you saw that 5-minute candle? I was sitting next to Johnny and I entered and he looked at me, guys, like this. Just me. Just pure look of fear on his face, bro.
That's good though. Now I get to learn how to stick to the edge. So
even if it stopped us out there, that response, right, is just a pure emotional response. It's exactly how the market makers make money.
Yeah.
They make money by inducing counterparty liquidity with large moves against the main trend. So when you have a chain of day delivery confirmed in structure on the hourly chart, a large move against the main trend is going to be on the 1-minute chart or the 5-minute chart.
That's why I stay on the higher time.
That's why you saw me go to the hourly chart and put my stop loss at the hourly swing point. Because that candle in there is going to be a candle that will induce the other side of the market. Most certainly, this candle is inducing counterparty liquidity. This will be the candle where people are like, now we're going lower. Because why? We had a fake push up here, like we had a fake push up here. What's the difference between these two price legs? Fake push up here, dump. Everyone is seeing the exact same price mechanic, but what's missing? There's so much higher time frame context here. 4-hour order block, 1-hour SMT, 5-minute chain of day delivery. I want to be buying that down close candle because that's the formation of a propulsion block. Right? But it doesn't look like that in the lower time frame. Look at the lower time frame. That just looks like, oh fuck. Like that looks exactly like the response you gave me, like, oh shit, we're fucked. And trust me, the old version, or a version of yourself that's unprofitable, is going to be shorting that. And then you're going to be longing this and longing that and shorting this, and you're going to be doing this on the 1-minute chart.
That's what happened.
Yeah. Right? Because in this price leg, it's very hard for you to convince me, if you're just looking at that price leg, that this isn't bearish. If you're not seeing everything else, you're not going to think that this is going to form a low there anymore. Yeah, it's a really good teaching opportunity actually today, because a trade like that induces a lot of emotion from everyone, including myself, but it's about sticking to your guns, right? That was good. I wish we got his face on reaction there. This guy looked over at me and he was just like, we're so screwed. Actually funny. Okay, so again, nothing's validated in structure here. We're looking good. We're forming imbalance and respecting it. High resistance liquidity is to be expected here, right? So because we are trading counter trend, again, for me, I'm not anticipating this is going to be a smooth delivery. I'm anticipating I'm trading a retracement here, and that's going to be a high resistance liquidity run. Who said the hourly close is going to be important? Talon's very right. Yes, this hourly close is extremely important. Can someone tell me why this hourly close is very important? What are we qualifying here now on the hourly chart? Consecutive series of opposing candles into a key level with SMT. Yeah, yes, a C3, yes. Yes, both answers are right. Continuation protocol, right? You are printing a continuation protocol on the hourly chart, yes. Consecutive series, change state of delivery, higher time frame level, C2 confirms the low, and C2 closes through the opposing run. A retracement here is welcome. You want to see this candle do what then? Everyone tell me in terms of the 4 parts of a candle. If you want to see this candle expand, what would you want to see? Open, low, high, close. Where would you want to see it form a swing point? It's permissible to form a swing point anywhere in the mean threshold of this order block. So you want to see this candle open, low, high, close. And this is a continuation. That's why the close of this hourly candle is important. Yeah, well done, guys. Right, both answers are right. It's a C3 and it's H60. So so what time frame is forming a candle 2 here? Look, candle 2 just closed. Candle 3 is expanding. So you can see that 4-hour candle right in here. Look, this is the 4-hour C2. Key level, order block, SMT, change in the state of delivery on the 15-minute chart, open, low into a 15-minute PD array. Candle 3 is aligned with expansion on the hourly. Candle 3 is aligned with expansion on the 4-hour. The 15-minute chart, candle 1, candle 2, candle 3. So now you're aligning your expansion through the H4 C3, the H1 C3, and the M15 C3. Do you see that? This is the alignment of expansion, right? This is why it's coming together with the 4-hour, as you can see right here, printing a candle 2 into the expansion, the 1-hour printing a candle 2 into the expansion, and the 15-minute chart printing a candle 2 into a candle 3 closure into a C4 next day expansion. This is a C4 next day expansion. Do you see how we're aligning all the time frames? And I position myself, unlike the fractal model, I position myself inside of what? The reversal. So the difference between the way I trade and the way, some other traders trade is that you're getting involved in the reversal of a higher time frame C2 formation. So you're aligning all the expansion. You're saying, I want to invalidate my trade near the reversal or the low of the candle that's forming the swing, as opposed to saying, I want to get involved near the open of the candle that's going to be the expansion of the next candle. Both are permissible. Both are valid trades. One of them gives you a better RR if you have confidence in the reversal, which we did, right? Would I shift my stop loss here? My stop loss is very, very well protected at this order block low. I can now move it to that 5-minute imbalance, but that's complete. Again, you could completely do this if you want because it's an opposing run and we close above it. Yeah. So you can trail your stop loss here. Sure. Let's do that. It's high resistance liquidity, so it could stop you out, but it's a good protected stop loss. Yeah. So let's do that together. So now we've secured profits on the trade. I like that idea a lot, BK. Yeah. Especially because we're trading a high resistance liquidity run. I like that idea a lot. So I'm going to move my stop into profit. Good call. This is why it's sometimes hard for me to teach and trade at the same time, right? Because I'm so focused on wanting to explain a certain concept, I sometimes not even looking at the charts, to be honest. But I hope you guys are learning something from this specific example. It's a very, very nice framework, but it's tough to negotiate on the lower time frame, right? You really need to have your higher time frame context. Let's keep this streak going. Now we've guaranteed secured some profits on this trade. 3-day streak. Let's keep it going. We're locked in. Better times are coming, guys. You notice? Sometimes it'll be tough in the market, but better times are coming. Let's see if we can get another 26-day win streak like in August. That was crazy. I don't know who was around. Who are the OGs? For me, trailing to this low here is just more risky because it's a high resistance liquidity run. However, because it's counter trend, I like the idea of trailing to that stop loss anyways. So I like the idea here, BK, because what's the higher time frame trend? It's bearish. Like, I know it's bearish. I know for a fact that price is seeking external range lows. So I like the idea of securing something on this trade, right? Now, if it stops you out, right, in profits, you have to accept that you trailed your stop to a intermediate term low in a high resistance liquidity run. Long term low, intermediate term low. This can be swept. This should not be swept. Okay? So you make the functional risk adjustment to say I'm trailing to an intermediate term low, and it can very easily take me out of the market, but I'm securing it counter trend, and both are permissible. I am going to be, like I said to you guys a couple of days ago, I am going to be much more focused on the streams on just trading good trades and then teaching after. But today's a really good example of like I couldn't help myself but try and teach you guys something here, because this is something that changed my trading a lot, was not fearing this kind of stuff. Because there's a version of myself which used to get so chopped up in here. And here's what I would do, guys. Break my rules here. Break rules and take this short. Like, this is the old fees, literally 2 years ago. Break my rules and take that short. Then take the long. Then see this candle. Stop out long. Go short. See this pump right here, go long. See this retracement, stop myself out. Like, I would be in 4 trades by now, and I'd be down $500. Like, I would have burned through my equity just chasing these short-term moves, and I would do it because the lower time frame looks a certain way, and I would do it consistently, and I know what I'm doing is wrong. Yeah. So on a day like this, when I see this candle, I'm not fearing this candle, guys. What I'm saying is I accept the risk. I know what my edge is. I accept the risk, and I'm living with the outcome. Done. And I'm taking that one idea. That's it. If it doesn't offer me that long setup, I'm not shorting. Even if you get stopped out, we're not shorting there, because there is no short thesis, guys. Right? The market takes from the impatient and it distributes to the patient. It distributes to those who follow for their rules and hold through with their logic and their systems. And I'm saying this because I am not perfect. I make mistakes all the time, and I still recognize that the faults I make when I break my rules are what cause me to do the most damage to my account. It's never the model. The model has never hurt me. Right? I was talking to my roommate about this. Like, I was talking to Talon about this. The model has never blown an account for me, ever, in my life. I've never blown an account due to my model. I've only ever blown an account due to what? Emotions, myself doing stupid shit, right? The account has never, ever offered a blown status from the model. And when you realize that, it becomes very powerful, because you can recognize that every time you deviate, you could take 5 losses in a row with Primo model, guys, and you could be absolutely fine. It's that 6th loss that's too big, right? That's a revenge trade. It's against the system. It's just a bad trade. That'll blow you out. Again, high resistance liquidity. We can see this candle in here is not delivering as fast as a distribution candle would want to, like a C3. So this is a good trailed stop loss right here, guys. I like this idea of saying if price fails to take the high, I don't want to be involved if it comes back below this low. Again, you can clearly see the weakness here on NASDAQ, right? ES is order paired, the weekly sell stops down here. And it's very much stronger back into the range. Like, this is a very clear bullish divergence on ES on multiple time frames. After the higher time frame reversal, right? Higher time frame reversal was yesterday, and then we had a bullish divergence here and then here as well, right? So 2 bullish divergences.